Setting effective standards is the cornerstone of a successful standard costing system. The process requires meticulous attention to detail, deep understanding of operation, and careful balance between ambitious targets and achievable goals. Many organizations struggle with this balance, setting standards that are either too lenient, masking operational inefficiencies, or too aggressive, leading to employee disengagement and manipulation of results. This comprehensive guide explores proven methodologies for establishing and maintaining effective standards across all cost categories while adapting to dynamic business conditions. Understanding the purpose and foundation of cost standards. The strategic role of standards. Standard costs serve multiple critical functions in manufacturing organizations. Beyond their basic role as predetermined benchmarks for performance measurement, they act as essential tools for strategic planning and operational control. Standards provide the foundation for budgeting processes, guide pricing decisions, and help identify opportunities for cost reduction. They also serve as communication tools, conveying management's expectations for operational efficiency across the organization. When properly set and maintained, standards become powerful drivers of continuous improvement and operational excellence. Characteristics of effective standards. Effective standards share several key characteristics that distinguish them from arbitrary targets or wishful thinking. First, they must be based on thorough technical analysis and empirical data rather than gut feel or historical precedent. Second, they should incorporate appropriate allowances for normal operating conditions while still encouraging improvement. Third, they must be clearly documented and communicated with transparent assumptions and calculation methodologies. Finally, effective standards must be dynamic, with established processes for review and adjustment as conditions change. Setting labor standards, a detailed approach. Direct labor time standards. The process of setting direct labor standards requires a systematic approach combining technical analysis with practical operational knowledge. Time studies remain a fundamental tool, but modern approaches incorporate additional data sources and analytical techniques. Conducting effective time studies. When conducting time studies, several key factors must be considered. Work environment analysis. Before timing specific operations, analyze the work environment for factors that might impact performance. This includes layout efficiency, equipment condition, material flow, and environmental conditions. Document any unusual circumstances that might affect results. Operation breakdown. Break each operation into clearly defined elements that can be consistently measured. These elements should be small enough to time accurately, but large enough to be meaningful. Document start and stop points for each element to ensure consistency across multiple observations. Sample size determination. The number of observations needed depends on operation complexity and variability. A general rule is to continue observations until achieving statistical significance, typically requiring 15 minutes 30 cycles for simple operations and more for complex ones. Allowance factors. Setting appropriate allowance factors is crucial for creating achievable standards. Common categories include personal allowances, typically 5 minutes 7% of total time for personal needs and breaks. This may vary based on working conditions and shift length. Fatigue allowances range from 3 minutes 10% depending on physical demands and environmental conditions. Heavy lifting or extreme temperatures may require higher allowances. Delay allowances account for unavoidable delays like material handling, tool adjustments, and minor maintenance, typically range from 10 minutes 15% of total time. Labor rate standards. Labor rate standards require careful consideration of both direct and indirect labor costs. The comprehensive labor rate standard should include direct compensation components, base wages, current rates adjusted for anticipated changes during the standard period. Consider union agreements, market conditions, and company compensation policies. Premium pay account for shift differentials, overtime premiums, and special skill or certification bonuses. Document assumptions about the mix of regular and premium hours. Performance incentives include any piece rates, production bonuses, or other performance-based compensation. Ensure alignment with quality and safety objectives. Indirect labor costs. Benefits and taxes calculate all mandatory and voluntary benefits including Social Security and Medicare taxes, workers' compensation insurance, health insurance contributions, retirement plan matching, paid time off accrual, other benefit programs. Training and development include costs for ongoing training, certification maintenance, and skill development programs. Consider both formal training time and on-the-job learning curves for new employees. Supervision and support. Allocate appropriate portions of supervisory and support staff costs. Document allocation methodologies and assumptions. Labor productivity considerations. Modern labor standards must account for various factors affecting productivity. Learning curves document expected learning periods for new employees and after process changes. Consider using stepped standards that reflect improving efficiency over time. Process variability account for normal variations in product mix, batch sizes, and operation sequences. Standards should reflect typical production conditions rather than ideal scenarios. Technology impact. Consider how automation and digital tools affect labor requirements. Update standards when implementing new technologies or systems. Setting material standards, advanced methodology. Material quantity standards. Setting precise material quantity standards requires a sophisticated approach that goes beyond basic engineering specifications. This process demands careful consideration of multiple factors and ongoing analysis of operational realities. Engineering analysis and specifications. Base requirements begin with detailed engineering specifications and bills of materials. These should be validated through engineering studies and pilot production runs. Technical documentation should include material specifications and acceptable substitutes, critical dimensions and tolerances, quality requirements and testing protocols, processing parameters and conditions, process yield analysis, conduct thorough analysis of process yields at each production stage. This includes first pass yield rates, rework requirements and success rates, scrap rates by process step, quality inspection results, process capability studies, waste and loss factors. Standard quantity calculations must incorporate various types of material losses. Process waste, document normal process wastes including setup scrap and adjustment losses, edge trim and end cuts, process changeover purges, sample and testing requirements, normal process variation, handling losses, account for material losses during transportation and movement, storage and inventory handling, loading and unloading operations, container residuals and packaging waste. Quality-related losses include allowances for inspection samples and destructive testing, quality rejections and sortation, customer returns and replacements, shelf life and deterioration, material price standards. Establishing effective material price standards requires comprehensive analysis of supply markets and cost drivers. Market analysis components. Supply market assessment, regular analysis of supply markets including supplier capacity and utilization, market concentration and competition, technology and innovation trends, regulatory and compliance requirements, global trade conditions, price trend analysis, document and forecast price trends considering historical price patterns and seasonality, industry forecasts and analyst projections, economic indicators and leading indexes, supply-demand balance projections, currency exchange rate impacts, cost component analysis, transportation and logistics include all relevant logistics costs, freight and shipping charges, customs and import duties, insurance and risk management, handling and storage fees, last mile delivery costs, supplier terms and conditions account for various supplier-related factors, volume discounts and rebates, payment terms and financing costs, quality guarantees and warranties, technical support and service levels, tooling and setup charges, setting overhead standards, a comprehensive framework. Fixed overhead standards. Fixed overhead standards require careful analysis of cost behavior and capacity utilization. Capacity analysis. Theoretical capacity. Calculate maximum possible capacity considering equipment specifications and ratings, physical space constraints, regulatory and safety limits, environmental permits and restrictions, utility and infrastructure limitations. Practical capacity. Adjust theoretical capacity for planned maintenance requirements, setup and changeover time, employee breaks and shift changes, training and meeting time. Seasonal factors. Normal capacity. Determine appropriate normal capacity levels based on historical utilization patterns, market demand forecasts, product mix requirements, operating strategy, investment plans, fixed cost analysis, cost identification. Carefully identify truly fixed costs including building rent and depreciation, property taxes and insurance, base utility charges, core staff salaries, and infrastructure costs. Allocation methodology. Develop appropriate allocation methods. Activity-based drivers. Resource consumption patterns. Cause and effect relationships. Service level agreements. Cost-benefit analysis. Variable overhead standards. Variable overhead standards must reflect true cost-volume relationships. Cost driver analysis. Primary drivers. Identify and validate primary cost drivers. Production volume, machine hours, direct labor hours, material throughput, transaction counts. Secondary drivers. Consider impact of secondary drivers, product complexity, batch size, setup requirements, quality specifications, customer requirements, consumption patterns, resource usage, document patterns of resource consumption, energy and utilities, indirect materials, maintenance supplies, quality control materials, packaging supplies, service requirements, analyze variable service needs, equipment maintenance, quality inspection, material handling, production support, cleanup and housekeeping, managing changing conditions and standard costing systems, systematic review processes. A robust standard costing system requires structured processes for reviewing and updating standards as conditions change. This ensures standards remain relevant and effective as business drivers evolve. Regular review cycles. Annual reviews. Comprehensive annual reviews should include complete cost analysis by category, performance trend evaluation, market condition assessment, technology impact analysis, process improvement results, strategic alignment check, quarterly updates, conduct quarterly assessments focusing on material price changes, labor rate adjustments, productivity improvements, yield variations, process modifications, equipment changes, monthly monitoring. Regular monthly checks should track variance patterns and trends, operating efficiency metrics, quality performance data, cost driver behavior, capacity utilization, production mix changes, trigger events for standard updates, market-related triggers, supply chain changes, monitor and respond to major supplier changes, raw material shortages, transportation disruptions, currency fluctuations, trade policy changes, economic conditions, consider impacts of inflation, deflation trends, labor market changes, energy cost shifts, interest rate movements, economic cycle changes, internal operation triggers, process changes, update standards for new equipment installation, layout modifications, automation implementation, method improvements, quality system changes, product changes, adjust for new product introductions, design modifications, specification changes, mix shifts, volume changes, implementation and communication strategies, documentation requirements, standard operating procedures, process documentation, maintain detailed documentation of standard calculation methodologies, data collection procedures, analysis techniques, update processes, approval requirements, reference materials, keep current versions of engineering specifications, process flowcharts, quality standards, control limits, performance targets, responsibility matrix, role definitions, clearly define responsibilities for standard maintenance, data collection, variance analysis, performance reporting, corrective actions, authority levels, document approval requirements for standard changes, variance investigations, corrective actions, special studies, system modifications, training and development, initial training programs, technical training, provide comprehensive training on standard costing principles, calculation methodologies, system operations, documentation requirements, analysis techniques, operational training, ensure understanding of production processes, quality requirements, equipment capabilities, material specifications, labor standards, ongoing education, refresher training, regular updates on system changes, new procedures, best practices, lesson learned, performance improvement, skills development, support development in analysis techniques, problem-solving methods, cost management, process improvement, communication skills, performance monitoring and improvement, variance analysis, analysis framework, structured approach, implement systematic analysis of price variances, usage variances, efficiency variances, mix variances, yield variances, root cause analysis, investigate variations using Pareto analysis, cause and effect diagrams, process mapping, statistical analysis, trend analysis, continuous improvement integration, improvement process, identification, systematically identify opportunities through variance analysis, performance trending, benchmark comparisons, employee suggestions, customer feedback, implementation, manage improvements via project planning, resource allocation, timeline development, progress monitoring, results verification. Metrics development, establish comprehensive metrics including cost performance, quality results, productivity measures, efficiency indicators, process capability, reporting systems, implement effective reporting through dashboard development, regular reviews, exception reporting, trend analysis, action tracking. Conclusion. Setting and maintaining effective standards requires a comprehensive, systematic approach that balances technical accuracy with practical applicability. Success depends on strong foundational processes, clear documentation, effective training, and robust monitoring systems. Regular review and update processes ensure standards remain relevant and useful as business conditions change. Organizations must view standard costing as a dynamic management tool rather than a static control system. By following these detailed guidelines and maintaining focus on continuous improvement, companies can develop and maintain standard costing systems that drive operational excellence and support strategic decision making. The key to long term success lies in building flexible, responsive systems that can adapt to changing conditions while maintaining accuracy and credibility. Through proper implementation and maintenance of these principles, organizations can realize the full potential of standard costing as a powerful management tool.